Hello and happy Sunday, everyone. Now, I decided to make a video about the stock analysis that I do every week. I had a few friends asking me about it, so I decided, well, why not? Anyway, I'm doing it every week. Just a short video, show you what I'm looking at. Now, before we get into the actual tickers, I want to show you two fundamental indicators that I am using in order to gauge where the market is at the moment. So this is this is 2000. Sorry, and there are only two tools out of the internals that I use in order to understand the market in terms of location. So relative to highs and low, recent highs and lows. So the first one is the Zweig breadth thrust. This is T2103 in terms of a ticker. That's just a reference that DC2000 uses for it. So as you can see, I have two hard thresholds. One is 6150, just about 62. The other one is at 40. And when the market moves below this line, I know that we're oversold. I'm expecting a bounce. So the last recorded one was about 9th of April. And as far as the up move goes, we had the last one really on the 21st of January. Now we had a very few close peaks recently. So this is the first one. The second one that I'm using is this right here, T2108. So stocks about their 40-day moving average. And the last one we had actually coincided with the spike breadth thrust, coincided about 7th, 8th of April. So this is the time when I'm looking for actual buys. Now, when we get into the overbought condition, I'm a little bit more careful with the stock selection. So this is it. There's no magic, only these two. The other ones are okay, but I prefer these two. Now let's go to stocks. So as far as stocks goes, we have Frog. Now Frog, very nice. You can say a flag here, a pennant, whatever. As far as risk is concerned, about 4% risk from the high to the low of this formation. Unfortunately, you would probably have some resistance into these weeks right here. And then if you look at the weekly chart, we're right here. So if we break that, obviously we have a little bit more consolidation right here, and then it's a very fast zone until about 65. But that's definitely not one of the best stocks that I'm seeing. So let's start with the good ones. BL, very, very tight formation right here. Stop below the low, about 5%. Huge gap above unfilled space, so we can actually look at a gap fill for about 12 to 13%, almost 3 to 1. Weekly chart looking not so good. So again, we're targeting right around here for the weekly chart, and then from here it's a very difficult zone to go through. So I'll be looking for those 12 to 13%, nothing more. Looking at Datadog, again, another stock that's been beaten down. But you can see April with the spike breadth thrust and the stocks above the 40-day moving average right around here. Now we have this little handle forming, again 5%, but this is a very fast zone with the gap above. So even if we're talking just about to the gap is 3 to 1, good looking stock. Then we have Waste Management. This moved a little bit above the pivot right here. Again, you have a stop right around here, so it's just about 3%. Now you can be very, very conservative and place a stop all the way down here, but that's about 9%. But this one is making new highs, all-time highs, so really you don't know where it's gonna go. Looking at Dynatrace next. Same thing with the handles, pretty much like Datadog. This one is a little bit more loose, still needs a bit time to form. But then we had some push on volume on Friday, so we'll see. Again, very fast zone all the way to the highs. So you have about 14%, and this handle is about 4%. So not bad risk to reward ratio. What next one we have CrowdStrike. Now, as far as CrowdStrike goes, perfect entry was right around here. Then it moved up, made a reversal, going back to this zone, testing it. Now it's pushing back up. So obviously, a entry using this large bearish candle as your risk parameter is a good idea. This is about 4%, 4.5%, and we're making new highs. So next obvious zone should be the 500 round number. looking at some capital market stocks. We have LPLA, again, a nice handle. Risk is about 5%, making new highs. 400's next obvious level, and then sky's the limit. In terms of capital markets, we also have ICE. It's making new highs, you can see it. This is a little bit wider in terms of a stop, so if you embark on something like this, I'll probably use this candle right here as a stop. Again, making new highs. We also have NASDAQ. NASDAQ's also making new highs. Now, this one is a little bit tricky on the daily chart, but if you look at the weekly chart, you'll see we're just about to break the highs. What else? We have Spotify. Spotify, very interesting formation as well. However, this is a little bit loose. 6%. It's not as good as CrowdStrike. Let's put it this way. We have Walmart. Walmart, sensational looking. Obviously, it's a buy right here using this large outside candle as your stop. You can be more conservative and place your stop right here. Again, 4%. Nothing to worry you. First resistance, obviously, if we fill the gap, first resistance will come about right here. This midsection here, we have a lot of volume, but then it's making all-time highs. So it's a good stock to watch. Now, one stock that it's already running, but I just want to show it to you is Roblox. Just keep it out there. It might give you, on a pullback, it might give you a nice buying point. It's a very strong stock right now. We have WPM again. That's gold. Obviously, gold is running right now with all the tariffs and all the fundamentals going on. Gold is in play. This is making new all-time highs. It's a relatively high-priced gold stock, but it's something to look for. It's giving you a very tight buy point right here with using this as a stop, only about 3% risk. So I think that's worth keeping track of. We also have AppLovin. Now, AppLovin, the reason why I like it, that was the buy point right here with stop right here. If you missed it, nobody to blame you. We have this reversal and then a strong move back on Friday. So you can just use this candle as your risk parameter. What else? We have Flex, electronic components, a little bit wider here on the stop, about 6%. Next resistance coming in right immediately here at the highs, but then it's clear skies. There's absolutely nothing above it. So we have this one, and then we have toy. Now, I like this one. Medical care. Basically, I'm looking at two groups of stocks. I'm looking at technology. I'm looking at Medicare, biotechs, whatever. These are the stocks that move. Now, you can play it safe and look at, look at some stocks that are slower but safer. For example, Walmart, a certain example of slower stocks, it's safer. But this is where you make gains. So you have to be careful. Now, as far as toy, I'm just showing you the stock because it looks explosive to the upside. However, the problem is risk. Now, even if you're using just a single daily range, you have about 12% stock. So obviously don't go full size, go half a size, go quarter of a size. Just, that's the order if you want to trade this. So these are the stocks that I have for this week. I'll keep you posted. I'll keep you updated. If you have some comments or, desire, just leave them in the comments. And if you like this content, obviously I hate to do it, but you can, subscribe, like, hit that notification bell so you don't miss the new uploads. And I'll see you in the next video. Have a great weekend, guys. Bye-bye.